The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent day at the headquarters of Technical Trading and Investing, TFNN.com. I'm your lovable and squeezably soft host, David White. We meet each day here at between 2 and 3 live, and of course 24/7 on replay. But it is a wonderful day. Nonetheless, we're up about 5 points on the S&P cash. We had the lowest open for volume for the first 30 minutes that we've had in over 3 years. Not much more volume now. We're still below 1.5 billion shares. And if I remember right, we had more volume than this the day before Christmas last year at this time. And it is what it is. It's everybody sitting around, and we're just slowly watching this market slowly melt up on absolutely no volume, and a lot of happy talk from some of those people in Washington, D.C., that if they just say that it's going to work out, they believe it's going to work out. But we've got dueling people. We've got the president saying we're going over the cliff on Thursday. We've got the Senate leader saying that, it'll all be worked out by Thursday. And for the most part, we've got warring factions in several parties going at each other. And we'll see how it plays out. I think probably the worst thing that's happened is that we found out how pathetic and weak journalism is in America these days. It made me go back to the days of William Randolph Hearst and his yellow journalism. Didn't matter whether it was true, and it doesn't seem to matter too much more from it's mostly the reporters on whether anything is true or not, but whether or not it sounds good, and maybe they can get a job with somebody. Maybe the president, maybe some senator, somebody else, anything to get them out of a business that seems to be pretty much self-imploding from a lack of quality and, of course, a change from print to electronic media. But now that these folks just can't write 1 or 2 or 3 or 4 articles a day and be done with it, they're pushed in front of a TV. You can only kind of hide your true nature for so long, and when you start rooting for the home team, it's hard to think that you're somebody that could be a decent, impartial judge, and we see a lot of that on both sides. But this whole thing has kind of made me think of the movie The Unforgiven, probably the best movie in a Western ever made. And what you found out at the end of all that was not the sheriff, not the gunslingers, not the prostitutes, not anybody that was just hanging around. Everybody turned out to have a lot of warts. And in the end, there weren't anybody that you really came away thinking that was a better for it or shown or had better angels of their nature. And I think all the attention to politicians probably only makes it worse. Groucho Marx always said, "I don't vote for anybody, it just encourages them." And I think probably over the last week to 2 weeks, I have to agree with them. A handful of people saying and sticking with the courage of their convictions, and a lot of people flapping their gums in front of any TV camera that comes in earshot. And for the most part, winning is probably more important than doing what's right for the country. Although I have to say, hard decision on what's right for the country. Do we just continue to spend ad nauseum until we become grease? Or are government employees so sacrosanct that they could never be released or be unnecessary? I think we find out that the answer is probably more on the middle than on either end. But it kind of reminds me of The Godfather, where the old sage was talking to one of the young kids. He says, every few years we've got to have this and blow it out, get rid of all the old blood. That was when they were going to the mattresses. And I always like that term. We're going to the mattresses. Basically, they'd find some place to hide out and throw a bunch of mattresses on the floor and hide out for weeks while everybody was gunning everybody else down. Well, we're going to go on to news now. Of course, that volume being the lowest volume for this time of day, especially in a full trading day. We don't even see this kind of low volume waiting for the FOMC announcement or anything else. Be very wary for rapid movements in the markets, because almost always you have a move up like this where we have we're up 16 points off the low with no volume almost every step of the way. Sometimes you go up, sometimes you go down, but this is a market that is cocked and loaded. One of my favorite songs out there, the line is, it's like I'm living in a powder keg and I'm giving off sparks. And that's exactly what it is. All it would take is one big spark here to move this market up or down. I've got a couple of positions that I'm feeling good on. I am not feeling good on calling an index, although I could be by the end of the day if this volume continues and we get to this level, because or get to a certain level. This is extremely dangerous in the fact that we are setting up a market that is infinitely fragile at this point. So in the news, what do we have? Mr. Dr. Doom, Mr. Rubini, is setting up an ETF. I didn't get a lot of chance to find out exactly what his ETF was all about, but he is going to be setting up. He was out talking today, I think on CNBC, a bit of the housing market. I'm sure it's probably going to be on repeats, but kind of interesting that he's getting into the ETF market here. Also, probably one of the things that has escaped journalists over the last week is that we've had a major snowstorm in the Northwest, and especially in North Dakota. A very early snowstorm, and there, at least the Weather Channel is reporting that we already have 100,000 cattle that are already dead. And the question is, why isn't the major news reporting it? It's almost like it didn't happen at all. Again, like I said, I'm probably not going to be any more disappointed in the press than I have now, but I can suggest that the reason is it doesn't fit into the narrative of everything getting hotter. And of course, if we have an early snowstorm, no hurricanes, it all ends up being one of these things where it doesn't fit their narrative. And we can talk about that forever. Expedia, EXPE, has been put on basically a sell list. Of course, they always call it hold in the business, so I've never told anybody to sell your stock, mister, but a hold is basically a sell. A sell is they're going bankrupt. Anyway, Expedia gapped down on monstrous volume, got back in and tried to go up to $54.12. Been sliding back down. Probably a good opportunity to think that this thing will at least hit the $45.75 mark. Let me zoom in on this so we can see just a little bit better. That mark came on July 26th and or 29th, excuse me, at 45.75. This thing did a decent test of the previous high. What it didn't do is once it got back up to 52.17, you needed about 9 million shares, and the best you got was about 6 million shares. This is headed on back down, but pretty good setup out here, but down to 45.75 and maybe even lower, looking at the volume that we have on that today. Netflix in FLX. A rumor, kind of tied by everybody else, but more looks like Icon and his press cohorts are really looking to push Netflix up here on extremely dubious news. That news is that Netflix is going to have their own application that will run in a set-top box. So if you're Comcast, maybe you've got Netflix running on that Comcast box, an application where you could watch any of the Netflix movies. How's that going to sit with Comcast and the rest of these guys? Blatant lie. There's absolutely no reason. Kind of like asking your enemy to come in and say, hey, can you hold my gun and my wallet for a while? To me, it's just outrageously ludicrous that any of these cable companies, I dealt with them for 10 years or more. For the most part, we called them ditch diggers because for all the talk of wanting to give a quality product to the end user customer, it was always what was cheapest. It had nothing to do with whether or not the products were very good. For the most part, if you went to something like CNN, they worked very hard to make sure their signals and everything out that went to the cable companies were great. But once you got to the cable companies, they were thieving bastards. They screwed over their customers at any chance they could. They paid off local townspeople with all kinds of pet projects, all legal, but still corrupt in my view. And these guys are not going to give Netflix the time of day. But I suspect that we are getting ready. I think it's October 23rd or 24th. If this thing gaps up, we get a nice 20-point move, 30-point move up to that 350 level. I suspect that will be the blow-off top in Netflix and where I will be buying puts. Nobel Prizes have come out in a lot of areas, but today they were announced in economics. Probably not going to have enough time to get to it in this segment, but we'll talk a little bit about those folks that did win them. And we're going to be looking at going through a lot of charts for earnings over at least the next 2 days, and be interesting. Of course, we've got a lot of big stocks in the coming 2 days. Thursday, we'll have IBM and some other big ones also. So stay tuned. Don't turn that channel, although I don't think we have a channel, do we? There's not really a knob you can turn anymore. Probably good. Not a button you can push either. You'd have to click. I think you'll keep that finger off the mouse and stay tuned here on TFNN as we come back and talk a little bit of economics and Nobel Prizes and earnings for the rest of the show.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Had a couple of quick questions, and I think I answered them in the den. But they had one question that I actually talked about last week, and that was, any chance Apple stuffed the channel with new phones? And I said absolutely yes. And the reason why is when any of these vendors say they sold so many is one thing. When they say they have so many activations, it means another thing. So what you want is to hear the word activations. If you don't hear that, that means they stuffed the channel. If they sold so many, that only means they went out the door and left their factory. When you hear activations, that means they really found a home. And like a wise old man once told me, there's an ass for every seat, but you've got to find it. And that's it. Anyway, I was talking about Nobel Prizes before we left. We had a couple of people, and I think 3 actually, win in the United States for experimental economics. And one was Robert Schiller. You'll see him a lot on financial TV shows. And some of the other ones were Eugene Fama and Lars Hansen. Lars with the math behind it, and Eugene Fama did a lot of the testing work. But those 3 together spent a lot of time on experimental economics. One of the things you should know is that Mr. Schiller was a part of what was called long-term capital management. This was a business that blew up rather spectacularly, ending in, October of 98 for, Black Friday, Black Monday, whatever it was in that October. That was the first time that a single company almost took down an entire economy, national economy. It was done by the incredible leverage afforded them by other folks because, of course, they were so smart and made so much money. Well, Schiller was a part of this bunch, so I'm not giving him a whole pass on the thing because maybe he learned by it, but certainly helped to look and built better models after it. But doesn't get away scot-free in my part. The other two guys have been pretty much in economics. Schiller made a lot of money by working with Wall Street, but the other two not so much. So they'll all get to split $1.6 million, and it'll be interesting. But at least we're having economics that have a little bit better to do than a roll of the dice. They are doing at least adding some kind of scientific testing to what they bloviate about so much. And so at least hats off to these folks. And a lot of this is a long time coming. Some of this stuff started in 1965 or 68. So this isn't just what they did in the last year or so. This is a lifetime of work for all three of these gentlemen in what is now called experimental economics. What else do we have in here? Volume still incredibly low, although we keep moving up a little higher. 1.6 million shares as we speak, and normally we come in with about 2.1 or 2.2 billion shares on the consolidated New York Stock Exchange tape, and I'm complaining. So to me, this looks like very much like the end of a long short squeeze, and I've got one position that I'm probably down a half a point or 0.5% on. Another one that's pretty good. The other ones are all positive still. Like I said, I haven't seen anything that would tell me to pull the trigger short on the indexes just yet. But if I was a betting man, the VIX at where it's at in the next couple of days, I think I'd be looking to buy out of the money puts on the off chance this all blows up in our face. And I'd say right now the odds are probably 50-50 that Thursday night we come into something and we have a spectacular day on Friday. But what you don't want to see getting to the highs is exactly what we have today, and that is not light volume, just about no volume. And 250 million shares in the first 30 minutes today pretty much said it all. That is that there's not a lot of volume up. Not a lot of volume down, and unfortunately you need a volume to move the kind of masses of money out here. If they can't break out the top, then they're going to go break out the bottom. My fear is with 1.6 billion shares on a day like this, pushing into recent highs, this would make my model even post a further or lower down model. Right now, we've got weakness to probably 200 points in the S&P cash. That means in 3 days, we could see a 200-point move in the S&P cash.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we still have a very light market, 109.25 on the S&P cash, up 6 points, 1.633 billion shares. And, of course, we're supposed to have a meeting at 3 o'clock with the president and what it quoted Republican leaders. I assume that means senators from the Republican Party, which has nothing to do with this. I brought it up in my newsletter for a couple of days. It's 250 some odd Republican House members that have to pass this. All spending bills have to originate from the House. They have the power of the purse. It doesn't matter how much senators wring their hands and yell and scream and call people bad names from a party of a drink that's from China. They have to pass it. And I have a feeling that we have at least a 50-50 chance of not having a deal going into Friday morning. And a lot of these puts out here are probably going to be paying off 10-1, and that's called pot odds. Those people not familiar with it should Wikipedia it. But we've got some incredibly good pot odds in puts this week, and I'm going to wait till I see the whites of their eyes. But anytime you can get 10-1 on a 50-50 chance, probably pretty good. But volume's certainly telling us that no one's believing this. 1.63 billion shares at 2:35 in the afternoon. Well, we'll see how this plays out. Probably the most interesting part is that we're going into this week with huge earnings announcements coming out. Now, we've got a bunch of them, and we'll be looking at them, but let's just go through them here fairly quick. Let's see, Citigroup, which is, I believe, before the bell in the morning, if I'm not mistaken. Not a really good read on this one other than the fact it still has a high volume low that I think this thing needs to come out and test. It did test the August 28th low on mildly lighter volume, about 5 million shares on October 9th. It did go below it and it's closed back above it, but you still have a nice gap out here at about the 45.50 to 46 level and a high volume low back at 45.06. And this thing has not tested that into that range yet. You could claim that the low would be the one of 621, but even then the low of day on that was 45.51. We haven't come anywhere close to that. My guess is that we're going to see that sooner rather than later. Commerce Bank shares, if I'm not mistaken here. Let's see what this one is. I must, for some reason, have some Commerce Bank shares. I think this is before the bell also tomorrow. This thing's been banging away at the lows. Volume really hasn't shrunk that low. We had a nice high on October 1st. We're into that high now and about half that volume. My guess is this thing's probably headed back down to 42. CSX. Which is after the market closed tomorrow. We're going to get a good read on how well this thing's been doing. This one's been playing around at the highs for a while. Pretty good sign that it's made a top. August 2nd, 26.68, 23 million shares. Got into it with 8.1 million shares on September 19th. It's been playing around in this lower range. You still have a high volume low that's been untested. That's the July 26th low at 24.42. Came within 4 cents of that on lighter volume on August 30th, but it did not penetrate that low. So you always want to be thinking that you could get back to it. On bad bad news, this thing's probably going to be racing back to the 24.42. On good news, you're probably limited on the upside to 26.68 from that August 2nd high. Hard for me to believe you're going to see 23 million shares in a day that we can't get 1.6 billion shares on the entire marketplace. But maybe there's more shorts in there that I did not know about. Domino's Pizza, if I'm not mistaken, after the bell. After the bell tomorrow night, I think. DPZ. This one's been playing around at the highs for a while. And what I dislike about this one is it really never had any volume above the $64.45 level from July 23rd. It's kind of gone through that on nothing but very, very light volume up to this high. And if you wanted to do some after-hours trading, if this thing started to even look a little bit weak, they missed their numbers. I'd be in for this one back to probably a good 64 would be the first time you're going to find support. But I think that you're probably going to see this thing head right back down to 60. So there is on some disappointments and a very fast mouse click, probably some things. Now, after the bell tomorrow night also, Intel. This is probably going to be a market mover. This thing has been working into lower and lower numbers. I keep on thinking we're going to see 2150 out of this thing. I think there's an excellent opportunity that we do see that. Of course, it hit a high at 2349 today. But wouldn't be surprised for this thing to come back down. I suspect they're going to try to get all the bad news out of the way. I think there's a lot of good news coming. I've just been waiting for this thing to come out and pierce through the August 16th low and hopefully get maybe back into the April 15th low, and that's 2136. And at those levels, I think that's going to be the washout. Very light volume in there would probably be a good opportunity to start buying it. After the bell tomorrow night also, before the market tomorrow night, we are going to see Johnson & Johnson, J&J. This one's been working lower. back up against its previous high of just September 20th. This thing's trying to get into that candle that had 14 million shares. We had 8.4 million Friday and 5.2 so far today. So it's going to be very hard to see a lot of these, but probably one of the nice safety songs or safety stocks that we're going to see out here. This thing did pierce the August 30th low at 85.85 that had 9.9 million shares with a lighter volume, which was about 1.5 million shares lighter. So you could probably say that on a disappointment, this thing's probably coming back to that 85, 86 level. And on a earnings surprise to the upside, you're going to have a lot of volume to get through $90.72. So not much on the upside downside. KO. And what's that? I don't know why I don't have some of these listed down here. Who knows? Coca-Cola Company. When we look at this one's about as far down as you can go. It's headed as back, as they say, low as whale poop. But you had a nice move the second of this year. Seems like a lot of these stocks that took off on the New Year's settlement of the government issues on the second, this thing had 21.8 million shares. Came back to it with 20 million shares, and I suspect probably see on an earnings disappointment back in and fill this gap between about 36.30 and 36.80. On an earnings surprise, we could see it go back up to 39.67. What else do we have? LLC. After the market close, Linear Technology Corporation. Boy, this thing's tough either way. I've got to say this thing has just been basing out sideways here for 2 weeks, maybe 3 weeks, back to at least to the September 16th high. And just hasn't done much out here. I've seen a lot of stocks to go sideways like this. This thing looks to me like any kind of weakness would have it back in about the $36 level. Any kind of surprise, and you're probably headed back up to the $42.82 level. OMC, which is, what is that? Omnicom Group. Another one that this one actually doesn't look all that bad. It's had a couple of bounces the last few days with no volume, which you dislike. And, of course, it's got a high volume low that is still untested. That is the August 28th low at 59.70. You need less than 3.2 million shares. So maybe an upside of 66.36 on a decent report. If it just comes in line or disappoints, 59.70 with a shot like a rocket. Pinnacle Financial Partners, PNFF, after the market closed tomorrow night. This one has broken through previous highs. Very light volume stock, so I'm not going to give a lot to this one, but keep an eye on this one. These are the kind that break out before earnings. And with light or no volume can really get slapped around fairly quickly. The two that I'm really starting to look forward to tomorrow night are Schwab. Actually, this is before the market open. SCHW, Charles Schwab. And this thing's just been bouncing around between 22.40 and 22.80, 22.71 for a while. I really don't see much in this one either way, other than the volume. It just was slightly less on the way down, down last time. Unfortunately, you have a huge high volume down day on with 22.9 million shares on the 19th, and you could kind of say that you got that tested back on the 8th and 9th of October. So you've got kind of a bottom back in there. So that would set up kind of the bottom of the trading range on this one, and that 22.71. 22.50, 22.84, all sets up the highs out here. You'd really need something to get this thing out of that trading range that it's been in for a while. One of the stocks that I think that could be setting up for a wicked move, and a wicked move to the downside, would be Yahoo. It's got that pattern that I've been talking about for a while, and that is the double repo pattern. It is set up classically out here, closing back above that level today. If it would close back below that level, then you would look at probably seeing 26.75, which is the last major low in this thing, fairly quick. This thing has been parabolic since 26.75. I've never understood where they were making all their money. It seems to be almost out of rarefied air that money is raining on them. I just figure that most of it has to do with them cutting a lot of dead wood, not actually making any more money. Those tend to be the fleeting, or most fleeting of earnings, and reality comes back fairly quickly. But what you would want is for this thing to close back under either the 9-day moving average or the 3x3 displaced moving average to get a move on, to get a beat on this thing. Either a 9-day simple moving average or a 3x3 displaced moving average. You just want this thing to close back below it again, and you'd have a short signal on this thing as long as the volume remains very light. So we've gone through those. I've got a couple of minutes left. We'll try to go into the ones that are going to be on to Wednesday. See if I got them. There we go. So we'll start looking at those. Abbott Labs, yes, turn that off for a second, make this a little cleaner. This thing has been banging away at lows, and certainly looks like any kind of more energy on this leg back down. You've got a fairly heavy move back here. I wouldn't be shorting this thing, but at the same time, I certainly wouldn't be long. The energy did increase in this last leg down. You're bouncing all over this gap that had about 22 million shares that's acting as support. It wouldn't take a whole lot to blow this thing through the bottom. Let's find some other stocks that are a little bit better. Maybe American Express. That is after the market closed on Wednesday. American Express in a constricting triangle out here where the lows or the highs are lower and the lows are lower. This thing has been coming out to a point. And if anybody's listened to the show for a while, we talk about an asymmetrical triangle pattern. And that's exactly that, where you have lower highs and lower lows, and it just keeps going on. If you wanted to just imagine a greater than sign, once it gets to about 3/4 into that greater than sign, mostly the first move will be contrary. That is, about 75% of the time, it's going to bust out to the upside if it's bearish, and downside, and it gives you a gift. But a high preponderance of these things break the wrong way the first couple of days. So if you were thinking about buying this thing, I would wait for it to break down and go lower, have very light volume, and then buy this thing to go higher. If it breaks out to go higher, I'd wait for a few days of lighter volume and then maybe a short on this. But I'll be watching this one fairly closely. Bank of America, which is 7 a.m. Wednesday morning. Almost nothing to say on this. I'll look and find a few more before the end of the show. You can always give me a call at 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we have some other stocks out here we want to look at, and the same thing. We're looking at earnings going into Wednesday, eBay after the bell on Wednesday. This thing kind of disappointed fairly strongly. Last earnings, or was it pre-earnings on the 18th of July, saying rocketed down on monstrous volume of 43 million shares. Got back into that gap with 13 million shares. Been playing around back here. Headed back for that gap, but you're gonna have to bust through that, which pretty much limits you probably on a good earnings announcement up to 56, maybe 57 bucks, where you're gonna have just a monstrous sell. Looks like someone's got a sell order in around 57 bucks. I don't know if they're out of it, but every time it gets up there, they find a lot of supply. We do have a fairly decent buyer back down around the $50, just under the $50 level over the last few ones. But this is going to be one that's going to take a lot of energy to bust out either up or down over it. IBM, I thought that was Thursday. Looks like this is on Wednesday. IBM, this thing has been giving every signal in the world that this thing's going to blow itself apart. I'm probably going to look at puts tomorrow and see just how expensive they are going into earnings. But this thing could be the first stock to really blow apart the tech sector out here as this thing gets below. It really looks like it wants to go to the high 157s. It's been stair-stepping down for a while, and everybody has come in multiple times to sell this thing over and over again. Other ones, what do we have? Late show, what is that? It's not interesting. Mattel, interesting company. Now this one I've been watching for a while. Gap down very strongly, came back up into that gap with a whole lot lighter volume. September 20th, it went back and challenged that gap at almost $44 with 3.9 million shares. The gap down happened on the 17th of July on 11.7 million shares. Not a big surprise. What you don't like about this one out here is this high volume low, and that happened on October 8th. This one would be an easy one to see it blow apart if their earnings forecast probably is up to par for what they're saying this fall. Pep Boys. Get this one out. This one has been banging around. Certainly looks like the key next one would be if it gets below $78. This thing's headed a lot lower. Probably on earnings surprise, maybe $1 or $2 higher. So not a lot in that one either. SanDisk. Of course, this thing's been a rocket, mostly on the price of memory chips. This one also would be a good indication of what we're going to see in the coming months. It's hovering around its high. This one has the opportunity, if they can give forecasts out quarters in advance, that they'll be able to keep this level of earnings up. My guess is that they will probably beat EPS, but forecast down as more companies in the memory space come on with higher volume. Certainly when we look at these highs being challenged, the high that we're looking for is the June 19th high, 63.73, 4.5. I'm dyslexic as all get out today. 5.4 million shares. We got into it with 4.5 million shares. It's back up there today on very light volume, 1.8. Probably going to hover up there. Anyway, we'll look at more of these tomorrow, but it's going to be an exciting week. Wait until you see the whites of their eyes, because I have a feeling there is some massive movement coming before the end of this week. We'll be back in a few moments, actually in 23 hours, and see you then. Same bat channel, same bat time.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.